What's up, everyone? Excited to give this video today about GuardForce AI, which is basically a robotics company that is starting to use AI to help securitize buildings and events for certain companies. So this definitely is a very interesting company. And what I'll be covering today in this video, I'll go over the chart, give a price prediction on shares based on technical analysis, and then I will dive into the fundamentals of the company. And then I will jump into the financials and compare those financials to the peers. So with that being said, let's jump right in here. So GuardForce AI is coming up to test resistance at about $9.13. This is where shares had topped out in early 2023 and late 2022. It's also where shares had topped out in May of 2023 and as well as March of 2023. So this definitely seems to be a level in which we're seeing a significant amount of selling demand, selling pressure on the stock, whatever you want to call it. So if we're able to close a daily candle above this resistance level, I believe it would signify that the stock is likely to continue higher over the coming weeks. So that's kind of what I'm looking for in terms of the setup for the stock. So if we're able to close a daily candle above that level, I think we could likely move up to about $19 over the coming weeks. And my logic for that is where shares topped out in April of 2023. It's also about where shares had topped out in February of 2023. And in the past, it's also where shares had topped out in September of 2022. So definitely seems like a significant level of resistance. So really just playing a move higher, if we get a move above this resistance level, I think we get a move higher back to resistance at about $20. So that is obviously a prediction of, definitely significant upside. And just to give you a gauge of, how much higher that is, that's about 114% move for the shares. So would be definitely a good jump for the stock. But like I said, I would need to see a daily candle close above this $9 resistance level before I really was very highly confident that this move is very likely. And we do have some bearish, developments in the stock as well. So we had the 50-day moving average cross below the 200-day moving average on June 27th, which you could consider as a bearish signal of momentum. This is actually called a death cross when this happens. It's by far the most widely watched and followed daily moving average signal is once we get that 50-day crossing below the 200-day, or if we get the 50-day crossing above the 200-day. They're both seen as major signals for buying or selling. So definitely not a good sign there. And we are also overbought according to RSI, with RSI trading at about 75 right now, which just signifies that this resistance level could cause a pullback for the stock. So be on the lookout for that. Like I said, I would really want to see this daily moving candle, this daily candle close above this resistance level at $9 before I really became super confident that this move higher, could kind of be sustained. And obviously the move higher is bouncing off of support at about $4 or $3.90, which is where shares had bottomed in March of 2023. So definitely, kind of seeing a double bottom here. And, that could also play into the fact that we see some more upside over the coming weeks. But as I said, I'll say it one more time. I really want to see a daily candle close above this resistance level before I kind of dive headfirst into the company. But that was the technicals. Let's take a look at the fundamentals of the company and see if this is a good long-term investment. So we can see here this article from SM Investor. So GuardForce AI is a Singapore-based security solutions provider that is expanding into AI and robotic services, which could potentially turn its operating losses into profits in the coming years. So with more than 40 years of experience as a security provider, GuardForce AI is a globally integrated security solution provider headquartered in Singapore that is that in the past few years made enormous efforts to expand into AI and robotic solution services. Guardforce is quickly establishing its presence in the Asia Pacific region, and experts and expects to get in a position to provide its services globally. Guardforce, their business is categorized into four main units: secure logistics business, robotics solution business, information security business, and security consulting services, which is mainly in the Asia Pacific region, and general security solutions, which is just from the fact that they acquired 100% equity interest in Beijing Wangang, definitely pronouncing that last one wrong, a certified national high technology company in China. So they're definitely very correlated and heavily into the Chinese market. That's where a lot of their acquisitions have taken place, and I'll jump through all of those in a second here. But the company's significant expansion into AI solutions and robotic services, combined with its well-established secured logistics business, can change the game for Guardforce, changing its operation losses into considerable operating profits in the following years. In 2021, the share of robotics, AI solutions, information security, and general security solution revenues in GFAI's total revenue was 2.4%, about less than $1 million. In 2022, the share increased to 10%. To 3.6%. So, seeing robotics, AI, be more and more of a bigger piece of this company. On February 15th of 2023, Guardforce announced it has acquired Kweb's, definitely pronouncing that wrong, robots business assets in China, once again expanding more into China, strengthening its robotics as a service capabilities and intellectual property, and expanding its geographic footprint for AI and robotics capacity. On the 23rd of February of 2032, the company signed an that's definitely a typo, of 2023, the company signed a artificial intelligence of things robot advertising contract with the local government in Macau to promote shows, exhibitions, and forums. So this is used at events, right? And Guardforce also acquired 100% equity interest in Shenzhen's GFAI and Guangzhou GFAI in the Greater Bay of area of China. And then Guardforce announced a collaboration with Flare, which is a Hong Kong industrial artificial intelligence and robotics center limited, to meet the growing needs of its clients. It is important to know that in the past few years, GFAI's robotics as a services platform expanded from 1 to 10 markets. So they were just in China originally, but now those markets include Hong Kong, Macau, Thailand, Singapore, Malaysia, China, Dubai, Australia, Japan, and the United States. So it is awesome to see that the company is expanding its businesses, pretty rapidly here. And you can see that they have some pretty big clients already. So FedEx is a client, right? Bank of Thailand is a client. IKEA, 7-Eleven, even Starbucks, Adidas, Vanguard, and this is likely just Vanguard's Chinese divisions, but still the company is expanding very quickly, and the names they've been able to garner attention from and business from are some of the most respected businesses around the world. So that tells you that this technology definitely does have some staying power. And if FedEx is trusting this company, why shouldn't many other large companies trust Guardforce AI? So that's really good to see that they have a wide range of customers and very respected and widely known customers. So that's awesome. But with that being said, let's take a look at the financials of the company and let's compare them to the peers. So This site here, Seeking Alpha, puts all of these grades relative to peers. So, price to sales is at 1 point, or excuse me, price to sales for the last 12 months is at 0.23, and that is well above the sector median at 1.44. Therefore, Seeking Alpha is giving a grade of A+. So the company seems to be trading at a discount relative to the general sector, which is always a good sign to see. And the price to book ratio is actually at 0.54, which means that the book value of this company, which is, for those that don't know, book value is basically, property, equipment, cash. The book value of this company outweighs the market cap of the company, meaning that, the market cap is only half of the company's book value, which is kind of crazy, right? So that definitely shows you that the company is trading at a decent discount relative to its book value and relative to the sector median. So the sector median's price to book ratio is at 2.7. So seeing this divergence here is why we see this grade of an A+ from Seeking Alpha. So overall valuation looks solid, but I do also have to mention that the company isn't profitable. The company doesn't have earnings per share. So keep that in mind. But with that being said, I'll keep it moving here. And then let's take a look at some of these growth metrics. So I don't have much to go off of here. Obviously, this is a smaller company, so these financials, I don't have much to dive into. But I can tell you year-over-year revenue growth is -2%, give or take, slightly below that actually. So this is well below the sector median, which actually grew at almost a 12% growth rate year over year. So we're seeing this company have growth that is below the sector median, which I don't love to see, to be honest. But at the end of the day, this number is not the end all be all. This company still could be, growing at could still turn around its growth. So not the end all be all, but it's definitely worth noting that the growth numbers don't look super attractive here. And then let's take a look at gross profit margins here. So gross profit margin is at 9.5%. For those that don't know, gross profit basically just tells you what a company makes when it sells a good or a service. So it's basically just revenue minus cost of goods sold. So this tells you that they make 9.5% for every item that they sell, right? So this overall isn't a horrible number. I'm definitely, happy to see that it's not negative, right? So not a horrible number there, although it is below the sector median of 29%. And then one more thing I'll cover here is cash per share. So they have $4.28 of cash per share, which is a good chunk of the company's market cap. It's actually 49% of the company's market cap is in cash. So half of this market cap is in cash, which is kind of intriguing, right? Like it gives the company a floor, if you will, right? So you're only paying really $4 for the company's equity, as they have a massive holding of cash on their balance sheet, and they also have a good amount of book value, right? So this is just cash; it's not book value. It's not the value of their equipment, their property, right? So when you add that into the factor here, the company trades below its book value, and I'll kind of dive into that in a second here. So let's compare all these numbers to the close peers here. So when we take a look at valuation, we can see that almost all the peers don't make any money. We see these two at the end making some money here. And then we have a price to book ratio that is actually the best amongst all peers. So that definitely tells me that the stock has, a pretty firm floor. And then price to sales as well is the best out of all the peers. So once again, obviously the company doesn't make any money, but these valuation metrics that we do have look pretty solid compared to the peers. And then revenue growth of -2% is definitely below the peer average here. As we can see, 84% for peers, 42% for peers. So to be -2% for growth definitely tells you why investors aren't willing to pay up for the stock at this current time. It's just because the company isn't growing at a clip that is, in line with peers. So, investors are kind of shifting capital towards the peers. And then gross profit margin as well also is one of the worst amongst the peers. It's actually the second worst amongst peers. So not a great number to have there. Definitely would like to see that be a little better, but I'll just keep it moving here. So short interest is at 13% for the company, which is actually the highest short interest amongst all peers. So that kind of tells me that the company has a higher likelihood of a short squeeze relative to all of its peers, which is definitely provides some upside potential for a company. But you always got to keep in mind, why is a company shorting the shares, right? Typically, it's because of very fundamental reasons. And if I had to guess here for GuardForce AI, it's likely caused by the company's less than stellar growth numbers. And then let's go for the money shot here. Let's take a look at the company's balance sheet. So they have $6 million in cash and then $28 million in debt. So net, they have $21 million more debt than cash, which isn't a great sign, obviously. But anytime you have a company that is that doesn't make any money, that's in a massive growth stage, it's very typical to see more debt than cash. But what is really intriguing to me is that the company has $11.86 of book value. So this company is trading significantly below its book value, which to me is very enticing and definitely signals that there is an opportunity for shares. But when we look at book value per share for the other companies here, we're definitely seeing some divergence there. GuardForce AI definitely has a significant amount of book value per share relative to peers. So like to see that. Overall, the company definitely does need to improve its growth before I kind of say it's a great fundamental buy, right? But if you've done your research into the stock, you like it a lot, I don't think you're insane for wanting to buy it. Although I do think it's worth keeping an eye out for the stock's news on its growth. Obviously, they've acquired a bunch of companies recently in the past couple of years, so hopefully that starts to pay dividends for the company, and we see some growth numbers spike up here in reaction to those new businesses coming onto the company's financials. So hopefully that acts as a tailwind for shares. And we can also see here that the company has underperformed all peers over the past 12 months and is actually the worst performing stock out of all the peers. So obviously not the end all be all. It was outperforming back in April, but that has changed over the past couple months. So definitely keep your eye on this company. As I said, I think the technical setup is pretty solid. Just want to get a move over $9 and see a close over $9 for the day before I kind of jump headfirst into shares. So that's my official prediction on shares. That's my opinion on GuardForce AI. I hope you enjoyed the video. If you did, please leave a like, and subscribe to our channel. With that being said, have a good one, everyone. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.